And so if I was going to title this segment, it would be Fickle Fundamentals. Fundamentals, obviously, when you look at a share price or a stock price, are what is the value that that stock represents? What is that company's actual value or worth? And you can ascertain that from many different standards that you want to use. Not everybody agrees on what it is. You hear people talk a lot about price to earnings ratio. That's the stock price divided by the current earnings per share, and that will give you a multiple. So if a stock price is $100 a share and the earnings are $10 a share, then the PE, price to earnings ratio, is 10. If it was $1 that they were earning and it was $100 a share, then the price to earnings ratio, oh my goodness, right, gets out of whack. You want a lower number to be safer, if you will. But how many times does that earnings go into the price? That's what's going to give you a price to earnings ratio. CFAs like Adam Harder, our Chief Investment Officer at the Financial Enhancement Group, would tell you that a PEG ratio is a more important number. He says that, interestingly enough, almost all CFAs would agree that's the number. The bad news is what the PEG ratio is for each individual company is highly disputed, because they have different ways of looking at what that growth rate would actually be. But it's price to earnings growth rate, and much more than just price to earnings ratio in their opinion.